Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that's all about a company getting a fresh infusion of cash. And let's just say they're making some pretty big moves in the world of advanced manufacturing. Before we get into the nitty gritty, if you enjoy us translating these dense financial documents into plain English, make sure to smash that subscribe button. We also have a fantastic community over on Discord linked in the description below where we chat about these filings and more. So what's the big news? It looks like Velo3D, a company that's revolutionizing how we make things with their 3D printing technology, just closed a significant offering of their stock. This means they sold a bunch of their company shares to investors to raise money. Let's break down what that actually means for Velo3D and its future. Alright, so Velo3D Inc. is the company in question here. They're based in Delaware, which is a common place for companies to set up shop legally. And their filing number with the SEC is 0139757. They're looking to boost their resources, and this filing tells us exactly how they're planning to do it. The report covers events as of August 19, 2025. This is the day they announced the main details of this stock sale. Now, what exactly do they sell? It's their common stock, which is basically ownership in the company. The par value is a super low number of $0.000 technicality for accounting purposes and doesn't really reflect the real value or price of the stock. Their stock trades on the Nasdaq under the ticker symbol VELO. If you've been following them or considering investing, that's what you'd look for. Velo3D is also checking the box for being an emerging growth company. This is a designation for newer companies that allows them to use certain regulatory flexibilities, like not having to follow all the accounting rules as strictly or as quickly as older, more established companies do. It's a way to ease the reporting burden when you're trying to grow fast. The main event here, the core of this filing, is about a material definitive agreement. Think of this as a really important contract that could significantly impact the company. In this case, it's an underwriting agreement. This agreement was signed on August 19, 2025 between Velo3D and Lake Street Capital Markets, LLC. Lake Street acted as the representative for a group of underwriters, which are essentially the companies that help sell the stock to the public. So here's the deal. Velo3D agreed to sell almost 6 million shares of their common stock to investors. Each share was sold at $3.00. Selling stock like this is how companies raise a lot of money to fund their operations, research, or growth plans. On top of that, Velo3D gave the underwriters an option. This means the underwriters have the right but not the obligation to buy another 875,000 shares within 30 days. If they decide to buy these extra shares, it's usually because the stock is doing well and they see more demand from investors. This could bring in even more money for Velo3D, up to about an extra $2.6 million. And get this, the whole thing was completed very quickly. The offering closed on August 20, 2025, meaning the shares were sold and the money started flowing to Velo3D almost immediately after the announcement. That's a fast turnaround for a stock offering. So how much money did Velo3D actually pocket after all the fees and cost? They brought in approximately $15.5 million from the initial sale. This is after things like underwriting discounts and other expenses are taken out. If the underwriter discounts and other expenses are taken out, if the underwriter do exercise their option for the extra shares, that amount could go up to about $17.9 million. That's a significant amount of capital to fuel their business. What will they do with this cash? The filing states their plan is to use it for working capital, which means the day-to-day operational costs of running the business. They'll also use it for capital expenditures, which means buying or upgrading long-term assets like equipment or facilities. And of course, general corporate purposes covers everything else. This sounds like a pretty standard use of funds for a growing company looking to expand its capabilities. This whole process had to be approved by the SEC. The shares were offered and sold using a registration statement on Form S1, which was declared effective on August 18, 2025. This means the SEC reviewed all the company's information and said it was okay to sell these shares to the public. The underwriting agreement itself has all the usual clauses you'd expect in a deal like this. Velo3D made certain promises and guarantees about the company and its business, as did the underwriters. There are also conditions that needed to be met for the deal to close, and important clauses about who pays for what if something goes wrong, especially protections under securities laws. This is all standard stuff, but it's the backbone of making sure the stock sale is fair and legal. Beyond the stock sale details, the filing also mentions another important event. On August 19, 2025, the same day they signed the underwriting agreement, Velo3D also put out a press release. This is how they officially announced the details of the stock offering to the public, including the price per share and the number of shares being sold. It's part of their communication strategy to keep investors informed. Finally, the filing lists the exhibits included with the report. These are the actual documents that support the information provided. Here's Exhibit 1.1, the actual underwriting agreement itself. This is the legal contract we've been talking about that lays out the terms of the stock sale. And then there's Exhibit 99.1, the press release that announced the offering. Exhibit 104 is the interactive data file. This is important for regulatory purposes, making the data in the filing machine readable for the SEC. And at the end, we have the signatures. This is where the company officials, in this case, Shu, the chief financial officer, officially sign off on the report, confirming that the information is accurate to the best of their knowledge. It's dated August 2025, the day after the offering closed. Now for my take on Velo3D and this filing. This stock offering is a pretty clear signal that Velo3D is in a growth phase and needs capital to execute its strategy. Raising $15.5 million, potentially rising to $17 on a funding, can be crucial for scaling up production, investing in new technology, or expanding their market reach. The fact that the offering closed so quickly and that they granted an option for additional shares suggests there was strong investor demand. This is a positive sign, indicating that investors believe in Velo3D's technology and its potential for future success. In a competitive field like additive manufacturing, having the financial resources to innovate and grow is vital. However, it's important to remember that selling more stock can also mean diluting ownership for existing shareholders. This means each share represents a smaller piece of the company, and if the company doesn't grow as expected, the value of those smaller pieces might not increase as much. Also, while using funds for working capital and capital expenditures is standard, the real test will be how effectively Velo3D deploys this capital to drive revenue growth and profitability. Are they investing in the right areas? Will these investments translate into tangible results? That's the question investors will be watching closely. Velo3D operates in a cutting-edge industry. Their technology is designed to produce metal parts with complex geometries, which is a big deal for industries like aerospace, defense, and even energy. The demand for more efficient and innovative manufacturing processes is growing, and Velo3D appears to be positioning itself to capture a significant share of that market. The key for them now is to execute on their strategy and prove that their advanced technology can deliver consistent returns. So in conclusion, this stock offering is a positive development for Velo3D, providing them with much needed funds to continue their growth. Investor appetite seems strong, suggesting confidence in their business model. The real challenge, as always, lies in translating this financial boost into sustained operational success and market leadership. Alright, that's our breakdown of Velo3D's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this capital infusion will help them thrive in the competitive 3D printing market? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more regular deep dives into corporate financials. And don't forget to join our growing community over on Discord. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.